Hi everyone, welcome to our live stream this afternoon. It's afternoon here in the UK. We've just come in after the start of the open of the cash market. And what we want to do in this, it's quite a short session that David and I want to do. I just want to have a look at some Forex and in particular, just go over very quickly the importance of understanding what we call the crossover sessions. That's this period between sort of the not the end of the London session because that's still ongoing and the European session, but it's when a new financial centre comes in and the importance of really appreciating that whatever may have happened in Europe and London does not necessarily follow through, certainly into North American session, which is US and Canada. And what we also want to have a look at, we've never really spent a lot of time recently on looking at the price action at the open. It's now just been going on for 5 minutes, and the importance of waiting for that initial volatility to calm so that we have some idea of some levels in terms of the high and the initial opening high and the initial opening low, so we can get a view of where the market is likely to be going. Now, at the moment, we're a little bit hamstrung because, as you know, with the shutdown in the US, financial data is essentially non-existent. And so the market is very unsettled about that. We've had some fantastic earnings results this week, but markets have not really been responding positively. They've been selling off. They've been coming back. Individual stocks that you would expect to the price action would be really, really positive. I'm thinking about Palantir, initially rushed up and then sold off really, really heavily. So, as I said, we are in a very, very mixed kind of market at the moment. So I just want to, first of all, share my screen, and I'm going to have to open my screen, get the screen going. There we are. Let's bring it up quickly. And the sooner we do that, then we can see what's been going on. So, as I said, I'm just going to start with Forex. If you've got any questions, then please just put them into the chat box. We'll be more than happy to answer them for you. And obviously, we'll be looking at charts. But when we look at the Forex market, what we like to do, David and I like to do, and those of you who already invested in our quantum trading and indicators, the first port of call is really to see where the individual currencies are in terms of the buying and the selling, and then see how the strength or weakness of that buying and selling is reflected in the actual pairs. And obviously this morning, the main news of the day for us here in the UK has been the Bank of England interest rate decision, and we can see that has been reflected in very strong moves in the British pound, very strong flows into the British pound. And you say, well, why? In fact, the interest rate was it was a hold. The market was expecting a hold, but what the market also wanted to know is the consensus between the members of the committee. Did they all agree about a hold, or was there some not disagreement, but divergence of opinion? And in fact, it was quite a close call. It was 5-4 for a hold. We are in a shocking state here in the UK with the economy. And at some point, everyone knows the BOE has got to cut rates to actually try and get some momentum back into the economy, which is literally dying on its feet. However, markets just simply reacted, and we had a strong flows into the British pound. Simultaneously, we have had strong outflows into the US dollar. The US dollar has been rising quite strongly. It's been trying to move up towards that critical 100 level. It hasn't managed to achieve that yet. And this is the divergence that we have literally at the moment. This is on the hourly chart. And as a forex trader, what you then have to decide is, well, is this actually going to carry on in the session that we are at the moment? Well, of course, anything is possible. But when you have such strong divergence between two currencies, the probability is that you are likely to get a reversal, or at least a pullback or a move, you know, back the other way. And because, as I've said many times before, although trading, certainly these 24-hour contracts, and it's certainly in the forex market is marketed as it is a 24-hour, five and a half, 5 point something days of the week. That is absolutely true. In reality, we are talking three individual, very distinct sessions, all having their local drivers as well as international and global drivers. So that's the first thing that strikes us immediately. We then go, well, I certainly look at the array. This is where we look at the strength of any trend in the move. And here I've actually got it on the 5 minute chart, and that tells me that in fact the cable has already come off, and simply proving to me that the hourly chart is what it is. It was telling us that we had these strong flows, but we are now seeing a little bit of reversal. If I'm then going to trade that particular pair, perhaps it's my preferred pair. This is a bit of information that I can take simply by not looking at the chart itself. And I have this set to the US dollar, but it's actually, if we look at the pound, the strongest one in terms of buying of the pound is still against the Aussie dollar. So there may be an opportunity for more buying of the pound, but not in this case against the dollar, which we saw this morning, but against one of the other currencies. And then we just quickly go through to the matrix here. And what we have here again, this is the hourly. So I'll just go down to the 5 minutes as well. And as I said, what you can do with this, the array and the matrix, they work on the calculations are different. The array is looks at the strength of trend, whereas this is more a statistical one that's taking the data from the CSI. But you can use them. They complement each other. They're not in competition with each other. They complement each other. And what's really nice about the matrix is because it assigns a value to that statistical measure, and it also tells you whether that you've achieved that value in terms of the all-time high and the all-time average, or the average low and the all-time low down here for those currencies. It gives you a sense of whether there is likely to be more movement. And then if you compare it maybe to what is happening with the array, it just gives you a really sort of a heads up, if you like, a visual picture of what these currency pairs are doing without you having to necessarily look at all 28 pairs. And what you can do, you can filter on individual currencies, and you pick them out, or you can have all 28 up. And what you also have is you have this really nice color background. So the stronger the move higher, the deeper the green, and then it gradually fades down into the sort of orange, the yellow, and then orange, and then goes into the red. And so far, I'm just talking about the 5 minute chart. Best way to use this is in multiple time frames, because you then see the pullback. So you could have a very strong move in a pair on a slower time frame, say the hour, but on the 5, you can see that maybe there's a pullback coming through on, say, maybe a 5 or a 10 minute chart. And are we anywhere near the all-time highs? We've got the pound New Zealand up here, and we've got the New Zealand dollar down here. Well, no, so telling us that potentially there is some that there is an opportunity there for those pairs. And as I said earlier, all our indicators, we developed these originally for our own trading, and then David sorted out the actual coding for them, and they're all available from quantumtrading.com, and the link to the site is actually at the bottom of this video. Turning to the individual currency pairs themselves, as I said, the 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 significance for this afternoon is actually what the US dollar is up, because the US dollar has been rising very strongly. As I said, it's had 5 or 6 sessions in an up move. We've got here 1, 2, 3, 4. We've got 1, 2, 3, 4, 5. We've had five up days, up sessions. But from a VPA perspective, that's awfully interesting. When we look at the volume down here, it's rising. Well, it was certainly rising, not necessarily on falling volume, but on flat volume, and certainly below average. So that of itself was telling us that this move higher, which, as I said, it's the nearest target for the dollar and for the Dixie, is this all important 100 level. And yesterday we had a kind of a sort of a shooting star. The importance of that is there's not a lot of volume underneath it. You would expect, if it was going to be a very strong sell-off, you would expect more volume. We've had a sell-off. We certainly had a sell-off in the first part of today's session, but based on what we saw on our specialist forex indicators, we are having a bit of a comeback, and that has also coincided with what is happening in the futures markets, which I think I pass over to David. He can show his charts on that. Is that they are wobbling. They are wobbling again, and that is what you tend to get at the moment with the dollar. If the dollar strengthens, the indices, they at the moment they wobble. If it sells off, then the stock market will tend to rise. So that is where we are with the dollar index. And for those of you who maybe trade the index itself, I have it here on four charts. I have a variety of our specialist volume indicators. We've got the VRSI on the faster time frame. I also use the VWAP, and for my levels, I have my manual levels, and I also use the Camarilla levels, just to give me an idea of whether I'm going to get a bounce off one of these levels, where I'm going to hit some resistance, and where I think the dollar is going to go. And at the moment, it's actually gone through the lower band of the VWAP. This yellow hatch line is the VWAP. This is the 5-minute chart. If it gets through there, we're going to need some decent volume. Whenever any asset comes to a significant level, however you draw that level, whether it's manual, whether it's from an indicator, you always see you need volume, and you need good volume. And we've had good volume coming in on this bar. If it gets over there, where is it going to go to? Well, I have it already marked up on my chart. I'm looking for 99.61. Moving to the individual pairs. The dollar yen is a pair that I follow quite extensively, particularly on the slightly on the slower time frames. I use the daily to give me a view of what is the dollar yen doing at the moment, and this is what I've done. And I do this with all the pairs that I am in all the assets that I trade, that David trades as well. It's one of my jobs. I look at the daily charts and I put my levels in, and some of these levels go back a long way. I mean, for the dollar yen, it will maybe go back 15, maybe 20 years. And you can see here, this level here at 154, dollar yen has tested it. I'll just expand that a little bit here, where we have it. And we can see we've already had 1, 2, 3, 4. We've had 5 failures. We've had 6 failures at it. So it's not surprising that it's now come off again. But going back to the volume, and this is what I said, when any asset, any chart comes to a significant level, and this is significant because of the number of times that it's actually attempted to break through this level, look at the volume underneath it, despite the fact that we have a wick to the bottom of the candle. From a purely price perspective, price action perspective, wicks are hugely, hugely important. We can see it here. Well, but we knew the probability of that was likely, to be more positive, because look at the volume underneath it is also above average. That one there, not as deep a wick as this one, I do accept, but still, nevertheless, and it did. It did go up, but where did it run into? It ran into this resistance level. So dollar yen is essentially sort of in this. It's range bound, and it's actually range bound between two significant levels. In the move lower, it bounced off here, and now it's stuck in this level. And as I've said many times before, this is now going to dictate what kind of price action we have on the faster time frames. So we've had a global look at what the individual currencies are doing. There may be reasons for a particular strong buy or sell in a particular currency because of fundamental news, certainly in terms of the British pound. No news for the US at the moment because of the shutdown. The one thing I would say is if this shutdown stops later today or tomorrow, then we are going to be in a whole new ball game with regard to the market. At the moment, there doesn't seem to be any sign of it. But as with this particular administration, we talk about the Trump tweets. We really do have to be, be very alert to anything unexpected that is coming out of this administration. Now, brilliant. We've had the first 20 minutes that has gone through with the cash market, and I think there's all sorts of things going on. I think there's a bit of divergence between the three main indices. So if I may, I'll pass over to David.